Section 12 of CGST Act, Time of Supply of Goods. Understanding when to pay GST? Let's simplify Section 12 of the CGST Act in 4 minutes or less. This section answers a crucial question: when does the liability to pay GST arise for goods? Spoiler alert, it's all about timing. The time of supply is based on whichever happens earlier: the date the supplier issues the invoice or the deadline for issuing it. The date payment is received. Fun fact: if the supplier receives a payment over 1,000 rupee more than the invoiced amount, they can choose to align the time of supply for this excess with the invoice date. Simple. It's the earlier of two events. When the payment is recorded in the supplier's books. When it's credited to the supplier's bank account. If GST is paid under the reverse charge mechanism. The time of supply could be when goods are received, or when payment is recorded in the recipient's books or deducted from their bank account. Or, if none of the above apply, 30 days after the invoice date. Can't determine the time? It defaults to the date of entry in the recipient's books. If vouchers are involved. The time of supply is when the voucher is issued, if the supply can be identified. If not, it's the date the voucher is redeemed. Got late payment charges, interest, or penalties? The time of supply is the date the supplier receives those payments. If none of the above methods works, the time of supply defaults to the filing date of the GST return, or the date the tax is paid. Section 12 creates a clear framework for deciding when GST is due on the supply of goods. Every scenario is covered, from invoices to payments, reverse charges, and vouchers. Stay compliant and avoid penalties. Like, share, and subscribe for more GST updates, simplified just for you. At Taxes Toolbox.